Welcome to ADU Point, a video series dedicated to accessory dwelling units. Hi, my name is Will Johnson. I'm a renovation loan consultant and ADU advisor. We're excited about accessory dwelling units. The new ordinances in 2020 has really removed a lot of major barriers. Combine that with financing, this will really empower homeowners to develop affordable housing for loved ones or create an attractive income stream. But there is a tale of caution. This is a complex, dynamic, evolving process. Selection of resources are critical. We've learned a lot with every ADU that we've built. So we'll interview key experts and ask probing questions around ADUs. We'll talk to architects, contractors, builders, interior designers. We'll also talk to financial specialists to understand the best financing that meets your needs. We're committed to advancing your ideas into action. So connect with us and get all of your questions answered. So let's get started. This video is about baby boomers. We've been very excited that with the opportunity of building accessory dwelling units. And I think what's been missing is to find the right financial solutions. So today we have an expert with us in reverse mortgages, and they're also called HECMs, and he'll talk about this. But I'd like to actually introduce Jeremy Knock. He's with Golden Age Financial Solutions, Inc. He's a veteran loan officer. He's been here in San Diego, lives in La Mesa, loan officer. So Jeremy, it's great to see you today.
Will, thanks for having me on board. I really appreciate that. I'm the president and owner of Golden Age Financial Solutions, and we specialize in the reverse mortgage and HECM loan space.
Great. Well, you have a presentation here today, and so why don't we just turn it over to you and have you start walking us through your presentation.
So today I want to discuss the HECM loan as an ADU building strategy for senior citizens. So what I want to start at the beginning of is, what is a HECM loan? A HECM loan is an acronym for a home equity conversion mortgage. What it really is it's an FHA insured line of credit. And the difference between these lines of credit and traditional lines is these lines can never be reduced and they can never be revoked. I'm sure some of you, if you had previous home equity lines of credit, the traditional ones, during 2007, 8, or 9, those lines of credit got reduced, turned down to zero, or turned down to whatever the balance was owed, and then they got shut off. So these ones are very different. Because they're FHA insured, they can never be reduced. And that's
how long have they been in existence?
The HECM loan's been in existence for a long time, but they made the biggest changes starting in 2013 and 2017. Okay. So they're really geared to protect the consumer. So the HECM loan ADU, what this does is it marries a strategy with a loan that never requires a mortgage payment to something like an ADU, which creates cash flow. There's no payment required before, during, or after construction. And that's very important because ADUs can take time to build. If you're building a modular unit, they're anywhere from 6 to 12 months. If you're doing a site-built ADU, they're anywhere from 12 to 18 months. So if you have traditional financing, you have to make a mortgage payment as soon as that loan funds. With a HECM loan, you never have to make a mortgage payment if you don't want to. But that's the difference. You can if you do want to. So what this translates to is, as soon as you put a renter in there, because you're not required to make a mortgage payment, all the money you get from that rent is pure cash flow. One of the other benefits of these loans is that you do the loan on your primary residence. That's where it's required to be done. However, you can use the funds anywhere. You can use it to build an ADU on your primary residence. You can use the funds to build on an investment property or multiple investment properties if you qualify for it. Or you can build it on your primary residence and investment property. There's a myriad of ways to use this loan.
Yeah, I think it's been exciting. To me, it just sounds like something I don't think anybody's ever understood before about these reverse mortgages, is you can do a one-time cash out, or sometimes it acts similar to like a line of credit.
Absolutely, yeah. So depending on how much equity you have, there's a variety of ways to use it, and that's one of the things that I specialize in, is teaching people the strategy behind the product. It's not just, here's a loan, good luck. I take a lot of time to really delve into my customers' financial situation, their wants, their needs, their goals, and so we can actually help to plan this as a long-term retirement tool. So One of the things that it's really important to consider is things like retirement income gaps. The average person loses about 60% of their income when they go from a working income to a fixed income when they retire, and that's a big jump. So if you're not prepared for that, if you're not set up for that, it makes the jump almost impossible. In fact, having a mortgage payment is the #1 hindrance to people's retirement. So if there was a way that you could take advantage of retiring early or on time, get rid of your mortgage payment and still live the life you want, this is the strategy to do that. So you have to take into consideration things like market drops. If you had asked me 6 months ago, what do you think the stock market's going to do? I would have laughed and said it's going to go to the moon. But over the past 2 months, I mean, there are people that have lost 30–40%. Now it's recovered some, but there are still massive losses in a lot of cases.
Yeah.
The other thing to consider is losing a spouse. If you lose a spouse and you're reliant on that Social Security check or that pension check that they have, and you lose that, that can be a real upset to your financial world. So putting the HECM loan in place, getting rid of a mortgage payment, or building an ADU to create more cash flow really does protect your spouse.
Yeah, excellent. Okay, sounds good.
So who's eligible? So first and foremost, you have to be 62 or older to qualify. Now, you can do this if you have a spouse that's under 62. You can do what's called a non-borrowing spouse. But one of you has to be at least 62. Now, this is not just something to keep in mind for yourself. Keep this in mind if you have parents. If you're trying to have an ADU built on your property, your parents can do a HECM loan on their property and use the funds to build an ADU on your property. So it's really important to think about it in terms of financial strategy, because ultimately that's going to turn into your inheritance anyways. So if there's a way to take advantage of it now, you might as well take a look at it. We do have some proprietary products that are specifically reverse mortgages for 60 and older, but they're a lot harder to come by. The loan, like I said, does have to be done on your primary residence, and you do have to have equity. If the home is paid off, that's wonderful. It gives us a really easy starting point. But even if the home isn't paid off, we can use the HECM loan to pay off the existing mortgage balance, and then we offer the rest in the line of credit.
Lots of good opportunities there that sort of are new to me. So this is really good and informative.
Yeah, there's been so many changes that people just aren't even aware of them. So I want to share with you this example that I like sharing. So let's assume that you have a paid off house. It is still possible if you have an existing mortgage. Let's say you've already done your homework, so you know that there's room to build an ADU based on all the state laws that have been passed recently. It's really, really helping folks put this in place. In fact, I think 95% of people applying are actually getting their permits approved now for these ADUs, which is incredible. Compared to before 2017, there was like 5% getting approved. We're going to assume an average ADU cost of about $150,000. That's kind of the sweet spot. You can build higher, you can build a little bit lower, but average is right in there. We're going to assume an ADU rent of about $1,800 a month, and we're going to assume that the remaining line of credit is left unused over a given length of time, and I'll show you what that looks like.
Yeah, 150 grand, so $300 a square foot. That's about 500 or 600 square foot unit. So that's easily a one-bedroom type of unit. Okay, sounds good.
So the scenario is that you are a 62-year-old homeowner with a home that is worth $765,600. Now, when we fund this loan, keep in mind, you will fund this loan with $150,000 at the closing table. And then on top of that, at the inception point, you'll see there in blue, you start out with a remaining line of credit of $210,000. If you leave that alone for 10 years, that line of credit grows to $315,000. And if you leave it alone for 20 years, that unused portion grows to almost $500,000. And that's regardless of the value of the home. It doesn't matter if we have a 2007 repeat of financial woes with the market crashing. It doesn't matter if your house goes to 100,000. You still have access to that line of credit no matter what. And that's an important thing to think about, because at that point, 20 years later, you're now 82 years old. The demands on your income are going to be much, much greater due to your rising health costs. So part of the strategy that I like to have people think about is, if you have multiple properties, maybe you want to build another ADU in a year. Maybe 10 years down the road, you're going to say, you know what, now I'm going to build another ADU at that point. And you have access to that line of credit no matter what happens in the economy, no matter what happens to the home values. It's always accessible, and it's because it's FHA insured.
So this line of credit, is this regardless of whether you're building an ADU or not?
Absolutely. Yep. In fact, let's say you decided you just wanted to see what this looked like and you didn't want to build an ADU immediately, we could fund this loan, and that line of credit would actually fund at about $360,000. So in that case, if your strategy was just set up the reverse mortgage as a retirement strategy for 20 years down the road, you're talking a line of credit in 20 years that would be closer to about the 700,000 mark rather than the closer to the 500,000 mark, which is a lot of money to have access to when you're 82 years old.
Wow, I need an education on this.
Yeah, we can dive deeper into this in another one of these events.
Okay.
So what does this really actually translate to in form of dollars? So you've got, if you do this loan the way that scenario was, you've got a $150,000 ADU built in cash. You've got an $1,800 a month rent that's cash flowing you $1,800 a month. You never have to make a mortgage payment if you don't want to, but you can if you do want to. The line of credit starts out at about $210,000 and grows over the next 20 years to almost $500,000. So one of the things I want you to keep in mind is that over the next 20 years, what do you think is going to happen to rents? My guess is they're going to continue to increase.
Yeah.
There's another strategy to think about in terms of using the ADU. Because this loan has to be on your primary residence, you can actually move into the ADU, which is still your residence. You can rent out the bigger house for more money. So you can really increase your cash flow. And that's something you can do in 5 years or 10 years, but it's just something to keep in mind for how to really utilize this thing over time.
Yeah, I always share that scenario with clients as a strategy is, you know, sometimes there's some short-term needs for an ADU, and then think about long-term and just start thinking about retirement. AARP was one of the first advocates of accessory dwelling units here in California. They put a lot of information out there. So they really see ADUs as creating affordable housing and really more so for baby boomers. So, I just think this is really important information that baby boomers in particular just need to sort of understand how this can really work in their favor. Nobody wants to retire into a different part of the country right now. Everybody wants to age in place and stay close to family and friends and resources and healthcare. I mean, these are all important issues as people approach retirement.
Absolutely. Since you brought up AARP, I'll share something with everybody. AARP did a study not too long ago. They found that 76% of the people that they surveyed wanted to age in place.
Yeah.
That's a lot of people.
Yeah.
So This is the tool. So in closing, you use this HECM loan, you build an ADU for more cash flow for retirement, you set up the line of credit to grow over time. You've got total flexibility in the payment options. You can pay as much or as little as you want to, but you never have to if you don't. These loans are non-recourse, meaning you can never owe more on the home than it's worth because it's FHA insured. If for some reason there was a point in time where you owed more on the property than it's worth, you could walk away from the property if you wanted to, and there's no recourse. The FHA mortgage insurance would pick up the difference from what's owed on the property. You could sell the property, and you just sell it for what it's worth. You can leave it to your heirs, who in that case could actually pay off 95% of that day's market value, which is a phenomenal opportunity in a really down market for them to acquire a property with potential of equity later. And all those things add up to a lot of security for heirs and your spouse.
Yeah, boy, that's a lot of great information. I think my takeaway is, this is a government-backed loan. There's just all sorts of security built into it. So I think that's, important for consumers and baby boomers to know. So this has really been great information. Jeremy, how do we get in contact with you?
Well, as you can see on your screen, you can go to my website, www.goldenaf.com. That's A as in Apple, F as in Frank. There's a contact us form, or if you want to get started, there's a get started form. There's my direct email, jknock, J-K-N-O-C-K at goldenaf.com, or there's my direct phone number if you have questions. Great.
Wonderful information. So we just have a couple of resources that we want to share with the audience. I manage a group on Facebook all about accessory dwelling units. So this is a great way to get in contact with professionals, share your projects, and overall network. So that's really been growing. There's really been a lot of interaction. So we always encourage you to join a Facebook page and just get a lot more informed. And then I also maintain a website on renovation loans, ST203K, and I have a whole section dedicated to accessory dwelling units. So we talk about all of the financing options that are available. We have details about all of the new ordinances that went into effect this year, plans from the county, from Encinitas. So it's just another wealth of information out there. So I just wanted to share that with the group. So again, Jeremy, thank you so much for your time today. It's been a wealth of information. We look forward to working with you and helping you bring solutions together.
Will, thank you so much for having me. I really appreciate the opportunity.
Yeah, thank you. Well, look forward to more videos with ADU Point. Thank you so much.